Hi, my name is Dhaval Shah and I work as a fund manager, and I have a total experience of 19 years in Indian equity markets. My investment style is largely to focus on growth-oriented companies. Idea is to buy a portfolio of businesses where we are able to see that the growth in the businesses is far higher than the nominal GDP growth of the country. We look at 4 important parameters while investing in any of the companies. First one is the size of the business versus the target addressable market. Second is long-term competitive advantage. Third important point that we typically focus on is strong financial discipline. And last but not the least, we look at businesses where we want to see that there is a management team which has equal measure of talent as well as integrity. To round it off, what we also look at is adequate margin of safety while we are investing in growth stocks. So we are investors which typically want to invest in growth stocks at reasonable price and not at any price because they are fast growing companies, and that is the last measure that we look at while we are trying to assess investments on an overall basis. Now, how does all this translate into various portfolio strategies for the portfolios that I actually look after? First is we've identified 4 broad themes where we find that most of the companies in these themes are actually growing at a much faster pace than the overall nominal GDP growth rate of the country. So what are these 4 themes? First is the fact that there are banks, and particularly large private banks as well as NBFCs. Second big opportunity is about manufacturing in India, which is largely led because government has introduced production-linked incentive plans, which is propelling growth across 14 sectors that we are trying to look at. Third large opportunity which we find fairly attractive is specialty chemicals, where a lot of companies are actually witnessing unprecedented demand because of China Plus One strategy. And last but not the least, a large theme which we think is a decadal theme is about consumption, where as the per capita income increases for everybody that we're trying to look at in the country, you'll invariably find that various consumption oriented themes have a fairly decent traction for the next 10 years. So this has various sub-segments like automobiles, luggage companies or film exhibitions or hotels, and a lot of other consumer discretionaries like electronics and appliances, where we find that there is a decent long runway for growth. These companies have very good return ratios, they are not very capital intensive, and will actually make a reasonable return from the next 5 to 7 year perspective. So this is where we find there are big opportunities which we would want to participate in the overall market when we look at how should we construct the overall portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.